Welcome to today's deep dive on Bitcoin and its market outlook for 2025 and beyond. As of early 2025, Bitcoin has evolved beyond its initial conception as a niche digital currency for tech enthusiasts. It has established itself as a store of value, a hedge against inflation, and a global asset class. But, just like any asset class, Bitcoin's price is driven by a complex interplay of factors that range from technological advancements and regulatory developments to macroeconomic shifts and market sentiment. To understand where Bitcoin is headed, we need to first take a look at where it is today. As we enter 2025, Bitcoin's price has experienced a rollercoaster ride over the past few years. From the historic bull run in 2021, which saw Bitcoin's price soar to an all-time high of nearly $69,000, to the subsequent market corrections and bear markets in 2022 and 2023, the volatility that once seemed a hallmark of Bitcoin's existence still holds true. However, despite this volatility, Bitcoin's long-term trend seems to be bullish. One key factor contributing to this positive outlook is the increasing institutional adoption. Major financial institutions, hedge funds, and even countries are warming up to Bitcoin. For instance, Bitcoin ETFs are now becoming more common, and major banks are offering Bitcoin products. Bitcoin is slowly transitioning from a speculative asset to a more accepted form of digital gold, much like precious metals, albeit with more volatility. But beyond adoption, there's something even more intriguing at play: the increasing interest from governments and regulatory bodies. While the regulatory environment around Bitcoin has been ambiguous for years, it seems we're entering a new phase where governments are either moving to regulate the space or embrace it. Countries like El Salvador have already made Bitcoin legal tender, while others are taking cautious steps towards integrating Bitcoin into their financial systems. With this shift towards mainstream acceptance, Bitcoin's price could see upward momentum, driven by the increasing trust from institutional players and the promise of innovation in decentralized finance, DeFi, and blockchain technologies. But it's not all sunshine and rainbows. There are risks ahead that could derail Bitcoin's ascent. One such risk is regulatory uncertainty. In recent years, the fear of heavy-handed government intervention has weighed on Bitcoin's market sentiment. Regulatory crackdowns in major markets like China and India have shown that government actions can cause significant price fluctuations. As governments across the globe continue to grapple with how to approach cryptocurrency, Bitcoin's price could be influenced by these regulatory actions, whether they be supportive or restrictive. Another risk to consider is the potential impact of technological challenges. While Bitcoin's underlying blockchain technology is robust, it is not immune to emerging technological threats or innovations. There is always the possibility that a competitor blockchain or a new cryptocurrency could arise, offering greater efficiency, scalability, or utility, which could eat into Bitcoin's dominance. For example, Ethereum has been making significant strides in its transition to proof of stake and continues to be a key player in the decentralized finance space. The environmental concerns surrounding Bitcoin's energy consumption are also worth noting. While Bitcoin's proof-of-work consensus mechanism has been essential for its security and decentralization, it has also drawn criticism for its energy-intensive nature. As global awareness of environmental issues grows, Bitcoin's carbon footprint could become a more significant factor in its adoption. The ongoing debate surrounding Bitcoin's energy use could drive innovation, pushing miners to adopt greener technologies or face increasing public scrutiny. Lastly, let's not overlook the impact of macroeconomic factors. In 2025, the global economy is still recovering from the aftermath of the COVID-19 pandemic, with inflation concerns, interest rate hikes, and supply chain disruptions still lingering. Bitcoin, often viewed as a hedge against inflation and a store of value in times of economic uncertainty, could benefit from these factors. In times of fiat currency devaluation, Bitcoin may continue to serve as a safe haven for investors seeking to protect their wealth from inflationary pressures. Yet, as with any market, sentiment plays a crucial role. Bitcoin has been historically driven by a combination of FOMO, fear of missing out, hype cycles, and investor psychology. If the broader market sentiment shifts towards optimism and belief in Bitcoin's long-term potential, it could spark another bull run, driving prices up. On the flip side, any negative news, whether it be regulatory crackdowns, security breaches, or a shift in market sentiment, could trigger a market sell-off and cause prices to plummet. The road ahead for Bitcoin in 2025 is uncertain, but it is clear that Bitcoin is no longer just a speculative asset for early adopters. The growing institutional interest and regulatory developments suggest that Bitcoin is positioning itself for broader acceptance. But external risks, such as government regulation, environmental concerns, and technological competition, could impact its price trajectory. As we look forward into the next few years, it's crucial to analyze the specific factors that will likely influence Bitcoin's price. Given the current landscape in 2025, these drivers are diverse, ranging from macroeconomic trends to technological innovations. Let's break down these key elements that could shape Bitcoin's market over the next 3 years. One of the most powerful forces driving Bitcoin's price is institutional adoption. This trend has been slowly unfolding over the past few years, and by 2025, it has reached a tipping point. From hedge funds to publicly traded companies, and even pension funds, institutions are increasingly diversifying their portfolios with Bitcoin. This is not just speculation, it's strategic investment. In fact, large institutions like MicroStrategy, Tesla, and Square have added Bitcoin to their balance sheets, while investment firms like Fidelity and Grayscale offer Bitcoin exposure to institutional clients. These moves not only signal confidence in Bitcoin's long-term value, but also encourage more widespread adoption. As these institutions increase their exposure to Bitcoin, they help reduce the market's volatility by introducing a level of stability that wasn't present in the earlier, more speculative years. But the real game changer may be the development of Bitcoin-based financial products and services such as Bitcoin ETFs and Bitcoin futures. In 2025, the growth of these investment vehicles could bring Bitcoin into the mainstream investment portfolios of both retail and institutional investors alike. ETFs provide a more accessible and regulated way for traditional investors to gain exposure to Bitcoin without the need for owning or managing the underlying asset directly. As demand for Bitcoin-based products grows, institutional investors could act as price stabilizers in ways that smaller retail traders never could. Looking 3 years ahead, we can expect even more institutional players to enter the space, potentially leading to greater liquidity and less volatile price movements. With increasing institutional interest, Bitcoin could become more correlated to traditional financial markets, as hedge funds and financial giants begin to view it as part of their broader asset allocation strategies. This deeper integration with the traditional finance ecosystem could add legitimacy to Bitcoin, boosting investor confidence and driving the price higher. The regulatory landscape is perhaps the most unpredictable factor affecting Bitcoin's price. While some countries have embraced Bitcoin, others have taken a more cautious approach or outright banned its use. In 2025, Bitcoin's future is heavily dependent on how governments around the world choose to regulate the cryptocurrency market. In some countries, particularly in Europe and the United States, there is a growing recognition that cryptocurrency regulation is necessary for both consumer protection and fostering innovation. The EU's Markets in Crypto Assets (MiCA) framework, which is expected to be implemented in the next few years, is likely to be a significant step toward establishing clear and uniform regulation for cryptocurrencies across the region. In the United States, the Securities and Exchange Commission, SEC, is ramping up its efforts to provide clearer guidelines for Bitcoin and other digital assets, signaling a more mature regulatory approach. At the same time, some countries like China have cracked down on Bitcoin mining and trading, citing environmental concerns and financial risk. If other nations follow suit with stricter regulations, the price of Bitcoin could face downward pressure due to fears of a global crackdown. However, it's worth noting that countries with more relaxed regulations or positive stances on crypto, like El Salvador, could see a growing number of Bitcoin transactions, boosting demand in regions with Bitcoin-friendly policies. The key factor to watch over the next 3 years will be whether regulatory bodies can find a balanced approach that encourages innovation while ensuring consumer protection and financial stability. If governments can create clear, fair, and stable rules, it will help reduce uncertainty and encourage more institutions and retail investors to confidently enter the Bitcoin market. Conversely, an overly harsh regulatory environment could stifle innovation and dampen investor enthusiasm. Bitcoin's underlying technology, blockchain, has always been one of its strongest selling points. However, Bitcoin's scalability, its ability to handle a large number of transactions per second, has long been a limitation. This is where technological innovations and scaling solutions come into play. Bitcoin's development community has been actively working on solutions such as the Lightning Network, which aims to enable faster and cheaper transactions by creating an additional layer on top of the Bitcoin blockchain. By allowing off-chain transactions, the Lightning Network could dramatically increase the transaction throughput of Bitcoin, making it more feasible for everyday use cases like online purchases and remittances. If successful, this could unlock massive new demand for Bitcoin, pushing its price higher. Additionally, Bitcoin is facing competition from other cryptocurrencies that offer higher transaction speeds and lower fees. Ethereum's transition to proof of stake, as well as the continued development of Layer 2 solutions, could challenge Bitcoin's position as the dominant blockchain for decentralized finance, DeFi, and smart contracts. For Bitcoin to maintain its leadership in the space, it will need to continue evolving. Whether it's through improvements to its protocol or through adoption of second-layer solutions like the Lightning Network, Bitcoin must stay competitive. Looking ahead, Bitcoin's ability to scale and handle a larger number of transactions will likely be crucial in determining its price. If Bitcoin becomes more efficient and can handle greater transaction volumes, it could solidify its position as a global payment system, increasing demand and, in turn, its price. On the flip side, if technological advancements from other cryptocurrencies make Bitcoin seem outdated or less practical, it could lose market share and face downward price pressure. Another critical factor driving Bitcoin's price is the ongoing global macroeconomic environment. The COVID-19 pandemic left economies worldwide with sky-high inflation rates, supply chain disruptions, and uncertain fiscal policies. Central banks, particularly in the US and Europe, have responded with unprecedented levels of money printing, which has significantly devalued fiat currencies. In this context, Bitcoin's narrative as digital gold has gained significant traction. Just as gold is traditionally viewed as a safe haven in times of economic uncertainty, Bitcoin is increasingly seen as a hedge against inflation. As inflation continues to erode the purchasing power of fiat currencies, Bitcoin could become even more attractive to investors seeking to protect their wealth. Furthermore, in the event of another economic downturn or global financial crisis, Bitcoin could shine as a non-correlated asset, particularly as central banks and governments are likely to continue their policies of low interest rates and massive stimulus spending. The next 3 years could bring more inflationary pressures and economic volatility, potentially driving more institutional and retail investors toward Bitcoin. Its deflationary supply model, only 21 million Bitcoin will ever be mined, makes it an attractive alternative to the inflation-prone fiat currencies. As we look toward the next 3 years, it's crucial to think about what the future of Bitcoin might hold in terms of price and broader market dynamics. While many of the factors we've discussed so far will play pivotal roles in shaping Bitcoin's trajectory, there's a lot more that could unfold in the coming years. In 2025, Bitcoin's price could potentially follow one of several distinct paths. Let's consider both the optimistic and pessimistic scenarios for Bitcoin's price and what would need to happen for each scenario to become a reality. The optimistic path is one where Bitcoin continues its evolution as both a store of value and a payment system. The current wave of institutional interest is not just a short-term trend, but rather the beginning of a long-term shift in how major financial institutions view Bitcoin. More companies and banks could continue to adopt Bitcoin as a reserve asset or part of their balance sheet diversification strategies. This would likely increase Bitcoin's price and make it more resilient to short-term market fluctuations. If Bitcoin continues to gain adoption in the mainstream financial ecosystem, we could even see Bitcoin become a true alternative to gold in terms of being a safe haven asset. As more people and institutions realize the potential of Bitcoin, its role as digital gold could become more ingrained in global investment strategies. This would likely increase demand significantly, driving the price even higher. It's conceivable that by 2028, Bitcoin could see its price approach or even exceed $250,000 as institutional adoption and broader economic uncertainty push people to see it as a hedge against inflation. More countries may follow the example of El Salvador and create more Bitcoin-friendly policies, while regulatory bodies worldwide adopt clear, stable frameworks that foster confidence among investors. On top of that, the technological advances we've mentioned, like the widespread adoption of the Lightning Network and other scalability solutions, could help Bitcoin handle greater transaction volumes and use cases. These advancements would not only make Bitcoin more practical as a medium of exchange, but also increase its utility in everyday transactions. If Bitcoin can seamlessly integrate into the global financial ecosystem and offer users both low transaction costs and speed, it will solidify itself as a dominant force in the digital economy. This, in turn, would drive up demand and push its price to new highs. However, the road to such a future is not without its bumps. There are numerous risks that could disrupt Bitcoin's ascension. The pessimistic scenario, which some still fear, is one where Bitcoin fails to scale effectively and faces more significant challenges from regulatory bodies, competition, or even internal technical limitations. The biggest threat to Bitcoin's price in this scenario would likely be the regulatory environment. While countries like the US and European nations are increasingly warming up to crypto regulation, others might impose stricter controls or outright bans, particularly if Bitcoin continues to grow in prominence as a competitor to traditional financial systems. A regulatory crackdown in key markets could negatively impact Bitcoin's price, as it would introduce uncertainty and limit its adoption. Another major concern for Bitcoin's price is the rise of competitors. While Bitcoin remains the leader in terms of market capitalization and mindshare, other cryptocurrencies like Ethereum, Solana, and even newer, faster chains could erode Bitcoin's dominance. If a new blockchain technology or a cryptocurrency with more advanced features gains traction, Bitcoin could lose its position as the go-to digital asset. This could create downward pressure on Bitcoin's price, especially if the perceived advantages of other cryptocurrencies, whether in transaction speed, scalability, or application development, become too compelling for users and developers to ignore. Additionally, the environmental concerns surrounding Bitcoin's proof-of-work consensus mechanism could become a growing issue as governments and global organizations push for greener energy initiatives. Bitcoin's energy and pre-mixed mining process could come under greater scrutiny. While Bitcoin miners are increasingly moving toward renewable energy sources, the broader narrative around Bitcoin's environmental impact could weigh on its price, particularly if public perception becomes more negative. Lastly, Bitcoin is still a speculative asset, and its price is often driven by the sentiment of retail traders and speculators. If a major global financial crisis occurs, or if market sentiment shifts drastically, whether due to an economic downturn, political instability, or the bursting of an asset bubble, Bitcoin's price could see significant declines. While some investors view Bitcoin as a safe haven, it remains highly volatile and driven in large part by investor psychology. And a shift in investor sentiment could cause panic selling, which could rapidly decrease its price. However, even in this pessimistic scenario, Bitcoin still has some potential advantages that could help it weather the storm. Its decentralized nature means that no central authority can control its supply or artificially inflate its value. While its price may face short-term volatility, its long-term value proposition could remain intact, especially as more people and institutions recognize Bitcoin as a unique form of money that is resistant to inflationary pressures. Even in a worst-case scenario, Bitcoin could still function as a hedge against fiat currency devaluation and continue to exist as a decentralized financial asset. As we move into the next few years, the price of Bitcoin will likely be influenced by the convergence of all these factors: institutional adoption, regulatory developments, technological improvements, and the broader macroeconomic environment. While it's impossible to predict exactly where Bitcoin's price will be in 2028, one thing is certain: Bitcoin's role in the financial system will only continue to grow, and its price will remain highly sensitive to both external forces and market sentiment. For Bitcoin to reach new highs in the coming years, it will need to maintain its position as the premier digital asset and continue to prove its utility in the global economy. As more institutional investors adopt Bitcoin, regulatory clarity increases, and Bitcoin's technology evolves to handle larger volumes of transactions, its value could skyrocket. Conversely, if regulatory concerns, technological limitations, or competition from newer cryptocurrencies become too great, Bitcoin could face downward pressure and price corrections. Ultimately, the future of Bitcoin is intrinsically tied to its ability to evolve in the face of these challenges while staying true to its core principles of decentralization and security. Whether Bitcoin can weather the storms ahead and emerge stronger, or whether its price will experience another extended bear market, will be determined by the decisions made in the coming years by investors, regulators, developers, and governments alike. What's certain, though, is that Bitcoin's journey is far from over, and 2025 may just be the beginning of its true potential.